Now, any questions or any comment or anything of the last session? Now we go into a little more valuation details. We understand a little bit about the mines and now the money elements. Any questions or shall we continue? So let's continue. Now, what are the money elements in a mine? One is the exploration cost and time. So that is quite a huge cost. And many times we are not even able to exploit the mine. The money goes waste. So the larger company, they have a separate budget where they keep on exploring. Then once that is done, then there are experts to estimate the total quantity of the sellable material. Now, the question here, which country has the largest oil reserves in the world? Any idea?
Saudi Arabia?
No. Venezuela.
Venezuela.
You see, the oil, because it is such an important commodity, the oil, US plays the politics on the oil. So if Venezuela, whose economy is worse than Pakistan today, they have, I think they have stopped using their currency. They use the US dollar today because the currency was becoming so bad. And US is not allowing them to export because they can bring the price down. So, now how do we know that they have the maximum? Nobody has gone below the ground and measured it. But there are techniques and there are experts to measure the total quantity of the oil or the sellable material. So that comes in. Then once all of that is there, then you have auctions where you have to put upfront money. Once you put upfront money and then you start doing the total, start to make the mines. Many times there are not even roads there, no houses. So you have to go start making roads, you have to start making houses for people to stay. Then how to move the material out from there. There are even cases where railway lines are built to carry the material. An interesting case here is there is a mine called Kodermukh iron ore mine. I hope you have heard about this. This mine is operated by NMDC, National Mineral Development Corporation. And from the mine, the iron ore is exported to Nippon Steels in Tokyo. So this whole work of logistics was so tedious that NMDC decided to make a railway line to transport the iron. So, so that's one what you call it, you have the mine, but how do you take it out? Take out and sell it. So that is upfront monies. Royalties to the government have to be paid. Then processing machines, we saw the collection and then there are more machines for processing and so on. Then we have environment management. That also is pretty big. I was just listening to the TV today, where in the morning, the COP23, which is going on in Dubai, there are so many people there, having processions, and the delegates have not reached a common agreement, and so on. So, and all of this is for environment. And then you have local level, quote unquote, business management, which means the mafia management. Sometimes the mafia is so strong that they don't let the trucks move out and they charge per truck, and the local labor contractor is mafia and so on. And then, of course, others. So there are various money elements in a mine which we see. And then we have to do the valuations. So how the price is decided by the end product. Now, this again is a very, very tedious process. If it is a metal, Then the prices are decided by MCX or London Metal Exchange. We'll talk about this a little bit. Energy in oil, there is two. One is called the Brent, and there is one more, New York Exchange. So there are two way this is done. In coal, the prices are decided mainly by auctions in the local market. So in India, the prices are different than in Indonesia and in Australia. And a few years ago, Adani and Tatas have taken huge position on their coal production in Indonesia and Australia. And then they started putting a lot of duties and taxes, so the prices went up. So that's what it is. On energy, on the solar, it is a contracted or the tender rates. Any idea what is the solar rate which has been tendered today? The latest tender, what is the rate per unit which will be at which price the solar producer will give it to the government? Any idea?
3.5 rupees.
Sir, you are slightly higher.
2.75.
Yeah, it is 2.8 rupees 2.8 per kilowatt hour for next 25 years. And the cost of making, the cost of producing energy from a steam turbine by burning coal is today over 5 rupees. So that is why the coal is now gone out of fashion. The first, I don't know what James Watt would be thinking in England. From he started with a steam engine, and now from steam engine, steam turbine, everything is going out. A very interesting comment here. Where I stay in Gurgaon in the society, close by there is a what do you call this press wala hota hai na, this hand press and pressing the clothes. Now, earlier, of course, we used to see those heavy ones, they put coke and so on. Today, a few days back, I saw he has a solid thing and he has another, some sort of a solid bar. And he was charging one bar or heating one bar by electricity, and with the other one he was using. So I asked him, why are you doing this? He said, because coal is too expensive for him now and this is cheaper. So you can see how coal is lots and solar is coming in. And then you have input local market prices, imports being highly taxed. So inputs, when I say means machine, there's so many other things input which are going in there. So these are the prices which we see. And a lot of these prices are fluctuating prices. Now, what is London Metal Exchange? It was informally found in 1571 in London. Formally, it was established in 1877, and they trade in metal, delivery, future, and options. Now, what do these three terms mean? Delivery, future, and options. Any idea?
Delivery is cash, F&O is derivatives.
No, you have given the stock market definition. Yes, correct. But how do these three things work in a metal market or a commodity? Okay, let me tell you now. Now, when we say delivery, it means I have purchased or I have sold, I have traded it with the good. So there is a money and there is a material, whether it is copper, zinc, or even cotton or whatever, oil or whatever, which is traded on the money rate. So today, when we do the price, the delivery may be after 1 month, 2 months, 3 months. That all depends upon the type of price we work. Now, in the future, now suppose I want oil in June 2024. So what I do is, it's in the future. So then I can place a bet that I can buy the oil in future at such a rupees, At that point of time, I can do two things. I can either take the delivery at that price, or if the price is not good, I can give the difference of the price and the contracted price, take a profit or the loss and get out of the market. Now, the futures help in stabilizing the prices because the buyer and seller, they are both anticipating the future prices, and hence the price remain in a band and it doesn't change hugely, on a regular basis. And in options, this is a financial product where they say you can take insurance, give a money. If the commodity comes to a particular price, you can buy. And if you don't buy, the insurance premium is the loss that you take. Now, the reason of future and options are used in the world is because they keep the stability of the price. Now, let me give you some more interesting. In Japan, the future trade on rice in Osaka Commodity Exchange have been recorded over 300 years ago. So anybody who's dealing in the stock market, you see the candlestick chart that was designed in Japan, and during the same time, they were trading of the futures. Whereas in India, the future trade have been recorded in the grain market over 3,000 years ago also. So there are records where all these Baniyas and Marwadis were trading into grain in future more than 3,000 years in a different way. Now, another thing with London Metal Exchange does is it is international base for the metal price. Now, let me give you an example. There is a company in Delhi called Pilot Industry. They are the independent largest reprocessor of lead. Now, lead is used in the batteries which we use for inverters and cars, the normal cars, not the lithium battery, the lead battery. And in India, about 1 lakh ton of lead is imported every year. We are a net importer of lead. Now, this lead, the virgin metal lead is produced only by Hindustan Zinc, and all the other lead is reprocessed. Companies like Exide and Amar Raja, they are reprocessing lead of the level of 10,000 tons per month, and Pilot is reprocessing it or re-refining it at about 5,000 tons per month. So how the contract they do internationally, because they buy scrap batteries. So when they buy the batteries, the prices are decided by LME minus how much. So they say automotive batteries, okay, and then they discuss, they see the pictures, they have an estimate of what the total concentration of lead is in the total tonnage. Let's say they talk of 500 tons, and it's 82% lead. So the metal exchange price into 82% minus whatever discount they do. So that is how the price is negotiated. In that also, there are some prices which are negotiated the time it reaches Indian port, and sometimes it is negotiated the time it leaves or the day the deal is struck. When it is at the time the deal is struck, then a lot more money is given. But at the time when it reaches the Indian port, then the money is given at that time. And both the two parties, they only talk about London Metal Exchange prices. So that is why London Metal Exchange prices is the base for virtually all metals in India as well. All these graphs which I am showing, please try. If people who are interested in the stock market can go to London Metal Exchange website, and there's a lot of very interesting things you can see there. So fresh metal, scrap metal. Then there is something called high sea sales. High sea sale is when some metal is moving on the high seas, and there is some problem which happens with the buyer or with the seller. So while it is on the high sea or lying in some port, not the final port of destination, the sale takes place. That also moves purely with the London Metal Exchange prices. Another one is long-term contract. Here again, Pilot Industry took a 3-year contract with a Korean company where they were supplying lead to the Korean company over 3 years. And the prices at which the contract was made was London Metal Exchange price plus alpha. So that, so every month it was that monthly price, which was dependent on average of lead daily and so on. So that's how the long-term contracts are made. Again, because it is London Metal Exchange, the buyer and seller, both of them, they take comfort in that. And then, of course, there are other private sales which are also depending on the quantity on LME or not. The reason I'm saying all of this is to show that here now we have two things to consider. One is the metal prices change every day, every hour. And the second is because the prices are quoted in USD per ton, the Indian rupee and the USD is also changing. So when we are going to do the valuation, how will we put our revenues? Now in revenue, there are two variations which have already come into the picture. So now you start seeing the complexities. So what is the right approach to do valuation, market, cost, or income? Obviously, it is not market approach. Mines are never traded, and each mine is unique. And the final output may have a different pricing at different times. So, and there is no sale comparator which is reliable. So we definitely cannot take the market approach. You cannot have a market approach in sale, purchase of mines or valuation of mines. Now, here, there are some more salient points. The first is you get a license, and the license is not transferable. Only the company who got a license will have to use it. You cannot sublease or rent that license out. So now that becomes a problem in many type of, in valuation, it is a restrictive. Then the land, very interesting. The land is not leased. You have not been given a lease of the land. The land is not given to you on rent. You have no right of the land for anything except to take mineral out of the land. So it's a very interesting, it is a usage type of a thing, but not lease, rented or anything. So the land cannot become an asset in this case. Machines, they are of the licensee, the guy who gets the license, on use and take out. You bring your machines, you use it, and then you clean it and take it out. And the maintenance also is of licensees. A lot of these machines, the delivery time itself is 24 months to 36 months. And the cost of a spare, like I was telling you, the 250-ton dump truck tires made by Balakishan Industry from Bhiwadi or Bhuj or Pune, they've got several plants, starts from 20 lakh, goes up to 30 lakhs per tire. So you can imagine how much the maintenance and other cost is about. So that's a big issue there. And the mineral taken out, here again, it can be sold in the geography market area as per licensee. You cannot sell the material to beyond the geographical area for which it has been specified in the license and can be used internally in license terms. For example, in cement companies, the material they take out, it can only be used for their cement plant, but cannot be sold outside. Similarly, in case of Steel earlier, they had mining rights in Orissa, and from Orissa, they used to take out the material, but they had the right to use internally or to sell it. So, so the mineral also here, you have to it is a geographically marked and as per licensing. Like Sisa Goa, they were taking out iron ore, and then Vedanta, Anil Agarwal, they acquired it. And the reason of acquisition was because they had the license to sell abroad, and the price of production of iron ore in India and the price in international market was vastly different. So, now you look into the type of business it is. I have a license to do business, but only I can do. Land, I don't have anything. Machines, I have to put upfront. And whatever material I take out, I can only sell within restricted area within a restricted manner. So, that's where the complexity of mine start coming into more and more problems. Now, what are the various risks in the business? One is price fluctuation in the international market. You may be profitable today and lost tomorrow. The price of lithium has started falling because there are sodium batteries which are coming up. Hydrogen is coming in a very big way. Bangalore Municipal has ordered, I don't remember, 300 or some buses, hydrogen buses, which are being made by a joint venture between Altamare and Reliance, and they will be starting to ply in next 3 months. I see electric buses going on Delhi-Jaipur route, Bangalore-Mysore route, which are about 250 kilometer. And now the electric buses, they are announcing up to 500 kilometer, they can run the buses. So from Delhi to Kanpur, you may have electric buses running. So who knows? So the price changes. In last 3 weeks, the price of oil changed from about $88 to $75 per barrel. One barrel is 200 liters of crude oil. So there is a price fluctuation, and in Indian market also we have to sell at that. Another thing which happens on the price is very interesting. When the with the Ukraine war, the oil prices shot up like anything. So our Indian Gujarati bhai, what they did was started with Reliance and then with Indian Oil and others. The embargo was that the Europe cannot buy crude oil from Russia. But there was no embargo on selling diesel to Russia from India. So what India did, they took a cheaper oil, crude from Russia, converted it into diesel, and sold it to Europe. Now that was very big, very good profit. But then government, what they did, they started putting in a tax on that, so that all the profit doesn't retain with the refiners. So, the reason I'm saying all of this is that in the price, the controls are very difficult to manage. Then mafia elements are quite common in mining area. I'm sure we all know the 290 crore rupees in the from Odisha and Jharkhand MP and so on. One of the big things which is there is that he is part of the sand mafia. Then machines upkeep and spare availability. I know for sure that in case spares are not ordered or kept on time, then you may have a dump truck, one or two not working, or a excavator not working. Now, let us say excavator not working, 60 ton of production in 8 to 10 minutes. 10 minutes, 60 tons, 1 hour, 60 into 6, 360 ton production gone. So the total volume goes down, and what to do now? So there now, these machines are made, which is called 1+1. They have two engines, two of everything. So one engine, they do the servicing while the other engine is running. Machine doesn't stop, because stopping of the machine means loss, and mining is a razor thin margin business. Another is safety in the mine. This is a serious risk and gives a lot of bad publicity and strict government penalties. I'm sure as a business owner, nobody wants that a lot of people start coming there and started shouting slogan, and Arnab Goswami making big, the nation want to know speech about the accidents. All of this will create so much of problem to the business. Now, you are unable to share the license, so one is bound by this. And even if you want to take a major partner, minor partner, 5-7% is fine. But as soon as the partnership crosses 25%, a lot of government approvals and other things are required. So this is also a risk in the business. And cash flow if the demand fluctuates a lot. See, today the auto industry is booming. Auto industry is booming, so steel industry is booming. So they are making big profits. Anything you make is selling. Construction industry goes up, the housing goes up, construction goes up, cement and steel goes up. So, then, but when it goes down, like in COVID times, then the lot of cost remains constant, and then it becomes a problem. And then doing valuation becomes even more problems. So let us say, start off. The only way we can work on this, in my opinion, is the income approach. As participants evaluate the income they can generate from the mine, and at the time, this is the base of running downstream manufacturing unit like Tata Steel and TPC. Now, what it means is, when the mines are being auctioned, how do you put the price, or how do you put the royalty percentage there? So what there is done is a particular type of what you call projection on the prices are taken by the big economists and the big consulting houses of the world. And on that basis, the people who are doing the auction, because they are running mines, they have a fair idea of how much it is going to cost. And then they put this, but still it is a risk. In mobiles, there is a very, 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 very famous study. I've used so many varies and you will understand why. When the mobile is started, AT&T was made by Mr. Graham Bell, and they still run telephones. So they put on McKinsey, the best management consulting firm, in 1990s, what is going to be the total market size of the mobile telephones. In 1990, they said, in their opinion, the mobile telephone worldwide will not cross 10 lakh sets. 10 lakh sets. So today that looks to be the biggest joke. So they were not able to imagine how much it will explode. And today, the largest number of shops in Gurgaon are either mobile or whiskey and wine. So, okay. Now, let us look into these different attributes and then we can talk a little more details in this. Mining is a complex operation that we have seen. And what is the experience of the operator? So even companies like SR, which were running mining in Orissa, they failed when they went and took the mining operation of copper in Zambia. Same thing happened with Vedanta. When they started doing some mining in Africa, they failed miserably. So what experience in one location, in one country, whether it will work in other or not, we still have to see that. Then what is the assets of the operator has? For example, if the delivery time of machine range from 12 months to 36 months, then what do you do? When do you order the machines? The interesting, again, very interesting is these machines, the biggest market on these machines for trading is in Dubai. It is called a Ritchie's auction, where these are auctioned on every Sunday basis. And the machines worldwide, they come to the Ritchie's website and the inspection, and then they are auctioned and so on. But even then, suppose there is a machine lying in Amazon basin in Brazil from there, for it to come in Orissa is going to take 3 months because it can't come as it is. It has to be dismantled and packed and then coming and then reassembly. So it's a big issue. So how much assets you have, that also makes a difference. Then the declared reserves in the mines are estimated. What is the percentage where the break even happens? Now here, when if you are lucky, you get much larger volumes. But if the full volumes or let us say 70% volumes are not given, you land up making losses. So that's another thing which we all have to see. Cash financial position required for the mining startup. One of the largest cash companies in the world, like Rio Tinto or Barricks, these are huge companies and they have massive financial powers. They made their stock listed in several countries so that they take the money, and without the money, to operate a mine is a big issue. Very interestingly here, in Nigeria, they have oil, and they have oil a little in the off on the sea. On the ground is separate, but they have oil on the sea. So Chevron, which is an American company, they took the right for taking out the oil, and they have made the full refinery on the ship. So they pump out the oil, they do the refinery, and they put it on the other ship, and they ship it from there. So now all of this requires a different type of cash and so. Now price fluctuation of the mineral over last several years and projection of international agencies. Now that is another very, very big issue. Uh, how much metal you can hold? No, you can't hold much because you have to keep moving. If you hold the material, your fixed cost like labor cost and machine depreciation and everything keeps on happening. So how do you manage that? So you have to keep moving the metal. And if you don't move the metal, large metal at the higher price, then you are not able to gain the small bit of money that you can, or extra money that you can make at that time. So that is another thing. And then last, the environment issues and the cost thereof. Environment issue is also is a little bit of a risk because what are the environment today and what the environment will come out tomorrow, we don't know. Tomorrow there might be regulation which asks for stricter control. So what do we do on that? Okay, now we have talked of several complex things. Let's have a small few-minute discussion on that. And I would like to repeat the whole thing so that it starts getting absorbed in ourselves, the complexity of the whole thing. So any questions, anything else? And I'm sure this is complex, huh?
Is there a cap on production? Like maximum mining you can do of up to that much ton or anything?
Normally, no.
Ah, can I ask a question?
Yes, yes,
If it, if others doesn't have a question, I would like to ask a question slightly more technical. Mr. Agrawal, my question is more to do with the reserves. Uh, now, let's say that, of course, there will be a technical guy who will be giving us a report. Now, he might also give uh, the probable, proven, and possible reserves. Now when you are looking at the next, let's say 10 years, because the license for the mine is, let's say, 10 to 12 years, of course it will be longer, so there will be a possibility of these proven reserves or possible reserves getting into a different category altogether. In that scenario, we as a valuer, how do we ascertain the underlying reserves? Because your revenue is based on your ability to take it out. I'm not getting into the capex requirement for it, but purely from estimating the reserves.
there is no way, as a valuer, there is no way we can find out what are the reserves or to verify except to take the report and see which agency has given the report and what is the reliability of that report. There is no way. How can you see, as a valuer, we normally will have to give a report within a short time, 1 week, 2 weeks, 3 weeks. And most of the data, if a company is running, will be available. If a company is gone under bankruptcy, not running, so a lot of data will not be available also. And the only way we can find the reserve is the report or the tender document which was floated by the government or the auction document. There is no other way.
No, I agree with you. My question is, uh, the report says these are the proven reserves. This so many tons is the probable reserve, or this is the possible reserve. Now, do I take all three together when I'm looking at it, or I just take only the proven reserves?
Okay. See, what I would like to do if I am valuing, I will take the proven results and reduce it slightly by 5%, 7%, or whatever, and then do the valuation.
So you will not consider other reserves that which the report has suggested.
See, the words, there are many words which are there. Now, which word is the best one we have to say? And for me personally, I would rather like to go with the word proven reserve, not probable reserves.
Okay, right. Thanks.
Okay, now this is where the judgment of what you have asked is a very interesting question. This is where the judgment of the valuer starts coming into picture. Now, for example, in a plant and machinery, I go and see a machine which is 30 years old, a press, 1,000-ton press. And when I evaluate with my experience, it says it can do another 30 years of production. So my value for that press will become in a different. Whereas the income tax and other the clerical method of valuation is going to be on a virtually nothing basis. So as a valuer, we our individual experience, our individual estimate, our individual, how much of things we understand, we make a study, that starts coming into picture, and that's when things starts becoming very, very different. Let me give you an example. We are doing valuation for a diagnostic lab in Dubai. Now, this lab has not made a profit for last 7 to 8 years. And some of the machines are over 12 years old. When we started looking into the legal things in Dubai for several machines, in Dubai, they have a rule where they have defined the type of machine and for the time they can be used. So there are certain machines where the time defined is 10 years and they're still using beyond 10 years. So we pointed that out to them, to the customer, see that these machines, as far as I'm concerned, I'm going to take a residual value of a scrap value approximately, because if you are using it, you are putting it as a business risk. So I, as a plant and machine valuer, cannot take any value even though you are generating profit. I don't know. Does it answer the question in some way? Yes, sir. Does it answer the question in some way?
No, no, I think this one, you have already answered it in the initial instant itself, because you have very clearly said you will take only the proven reserves. So you're not assigning any value for the other reserves. So I
Hmm.
think that answers my question.
Okay. Any other thing? Or I will just go a very quick repeat on this.
So there is one question. Many a times
Yeah.
the mineral that is extracted, the possibility or proven result says that this much will be the mineral content, let us say 12 to 20% or 12%, whatever. And then actually when the mining starts, the percentages differ.
Yes.
So do we consider something like that while doing valuation?
Of course, we have to. You see, the reason being, see, 12% is very good. Normally, these reserves are in the range of 3% to 8%. And in things like gold, it is even less. Okay. Now, let us say when the auction happened, the announcement was it is 6%. And in 6% over a period of 2 years, we see it fluctuates between 3 to 4% or 3 to 5%. So 6% was an announcement. It may be there in some other pocket. I don't know. But so far, because it has given me between 3 to 5%, I would tend to take an average of 4% and then take the revenue targets.
So one more question. In India, the
Yes, please.
licenses are not transferable or you can't sublet the mining rights. But in other countries, how is it?
Same. Same. You cannot sublet. So what then? You see, there are people, what they do is they the company which wants to buy that or they buy the license, they don't buy the license, they become a contractor to that company. They do all the work and then they also become a customer. So there are always ways out. Indian people are very innovative in doing all these things. Okay, I'll tell you what I mean. What I mean is, let us say a steel company wants to buy ore from Sisa Goa mines in Goa. So what they do is they want to buy that mine, but they cannot. So they will come and tell the operator of the mine that, okay, I'm going to manage your mine. So you appoint me as a contract, which he does. And then another of his company subsidiary, they will buy the product and take it. So that's another way of what people do.
Sir,
Uh-huh.
sir, is there any moratorium period for payment of royalty, or is royalty starts from day one?
See, there are normally three type of payment which is required by the government. The one is what you have to pay upfront, जिसको हिंदी में कहते हैं तिलक लगाने का पैसा. Okay.
Yes.
Then the second is you have to pay per year, like the lease rent of a lease area, like you have in Noida and other places. And the third is percentage of the sale value of the mineral. So तिलक लगाने का पैसा तो जैसे ही आपको ऑर्डर मिला उसके पहले देना है. And then the per year what you have to do, you have to do. The sale money you have to do when the sale starts.
So if there is a delay on the part of party to make production because of environmental clearance or like capex expenditure, so government penalize that party or not?
Yes, they do. Yes, they do.
Okay, thank you, sir.
Recently, there was a case in 5G deployment when the government started putting pressure on Vodafone that you have taken the license and you have not deployed it, so they will take the license. So, it was there in the news also, na? So even though they are not taking out, there's a technological upgradation which also gets monitored. See, end of the day, this whole mining should benefit the society, should benefit the people in larger tax collection and better jobs in that area and so on. It should not become that a person has taken the mine to restrict the market, and he can increase the price from his other mines. Correct?
Yes, sir, correct.
So that is why all these things happen.
Okay. Thank you, sir.
Indian business people are very, very smart. I'm sure as valuers, we have seen a large variety. So let me review this thing again so it remains in the mind. I'm also trying to do is see putting in these things so that one gets it into the head, and there is a newer way of looking into valuation as a profession, and maybe some of it is used in our regular job also. This not necessary how the mining valuation gets declared, standards come into picture, we don't know at this point. Okay, while we are doing, let me give you a very interesting another case. uh, SR oil has been purchased by Rosanet of Russia. They have this refinery in Gujarat, and they wanted to do a valuation for insurance purpose. So we were quoting for we quoted that and we lost. We quoted 21 lakh rupees and we lost the price which was went there was 15 lakh rupees. Now while doing all of this, I have some of my university batchmates working in Reliance. So I asked them what they said, the Reliance Jamnagar refinery has been insured for 3 lakh crore and the insurance premium paid is 720 crores. So, so just look at the amount of money. And so I asked them, how do you do the value? They said they have got 5 or 6 people, a team of technical and insurance and other people who keep checking and keep doing what is going on and insurance, maintenance and upgradation, and then they see how to do the premium. Because 720 crore premium it is more than I guess 95% of the companies running in India. Okay. So about the mining, some salient point that licenses are not transferable. The land, now here it is a very interesting. There was a case where we were asked to do valuation of a mine. My friend who's a land and building, we had huge argument only on the land thing where he was saying the land is leased and I was telling no, please show where it is written the land is leased. And number two, if it is leased, there should be a lease agreement and there should be a lease rent and all the issues of the land lease. And this was in Bihar. So I said, because land lease is a state subject, whereas the mining licenses have been accorded by the center. So anyway, we had a difference of opinion. So land becomes a very interesting. It is not leased. There was no lease document, not rented, no right of anything. So, but he had the right to take out the mineral or the goods out of it. Then machines, that becomes a very major issue. Uh, I had a relative working in National Mineral Development Corporation. He was the head of Donamalai iron ore project. And the only thing he used to get a list of machines under breakdown, which are under breakdown for more than 30 minutes. He said his everything is dependent on the machines. If a machine is breakdown for more than 30 minutes, he said that is the worst. And he says he has how many, he says for in a year, 2 or 3 times, he has to take a person and fly it down to another country to get a particular spare. Otherwise, it will not happen. So that is on the machines, and then the mineral because minerals the in India because it is a very big growing market. So we are always short of metal. Like for example, steel we import high grade steels, but we also sell a lot of stainless steel to international markets. So that's where. But today the government of India is very keen not to sell ore or the raw material, but to sell the finished product, the value added. Also, government is much more keen. So you set up a factory, take a mine, set up a factory, because that gives more value add, more jobs, more tax revenues. Then we see the risks of the businesses. Price fluctuation is a risk. Of course, we saw about it. Anybody who's working on the stock market knows that if Reliance is 24.50 today, tomorrow it might be 25.50 or 23.50. I don't know. In 1 hour, what it may be also, I don't know. Then mafia element, we all know the largest mafia are in the mines. In coal mines, it is really bad. Then machine upkeeping and spare, that is a very, very big issues. Then safety in the mines, yes, it has now become safety officers are very senior people and like this. Uh, Unable to share license is as one is bound or one doesn't able to make money out of it, and cash flow, the demand fluctuates a lot. See, one of the big reasons why SR Steel also lost was, or they came into serious problem was that they bought a lot of machines and they were not able to garner the efficiency and the quality what they were able to do. So their total SR Steel, what you call, sale to the auto companies, because auto companies are the largest buyer of steel, was very, very small as compared to Steel Authority or Tata Steels. So income approach we saw is suitable. Now, what are the different attributes? Mining is complex operation. We have seen this. What is the experience of the operator? So when we go for value, we have to look into that. So if it is SK Agarwal Mining Company, you can give it minus 100 points. And if it is Rio Tinto, you can give 100 points because Rio Tinto is the largest mining company in the world. Now, what is the asset of the operator has? This is a very important issue, and a lot of tenders or auctions are decided when on that, on how quickly the assets can be purchased or sold. A very interesting thing, when the mining are going on, the mining company keeps a tag of all the assets of a similar nature, and because they know when the asset can be made available. So that the declared reserve of the mine are always an estimate. And what is the percentage? Where is the break even? We discussed a little bit about this. And cash financial position required for the mining startup is very high, because mining also gets a slightly lower interest rate from the financial institution, not as infrastructure, but they know mining is a large gestation period, 8 to 10 years, and large monies, and environment issues and the cost which are related to that. Now, let us say copper mines in India. Now, Bharat or India is a net importer of copper, and approximately 3 lakh tons of copper was imported last year, and the domestic production is 41,800 tons. Considering we are going to have more electrical vehicles, the import is going to grow larger. Now, 3 lakh ton was not virgin or new copper. A lot of it was also scrap copper. Now, Hindustan Copper Limited is a PSU in copper. It is in Rajasthan. It is a Sikh company because of very high operation cost. There, the operator gets a 1 lakh plus per month, because they are 50-year-old and every year increments and so on, and they are not able to operate to that extent. And that's a poor management with relation to output and cost. They have a perpetual mining license because Hindustan Copper is a public sector, and they have the best mines of copper in India. So because of high operation cost and poor management, they're still not making profit, even when 3 lakh tons of copper is imported. So they have a ready market. Now you look into another company called NMDs, National Mineral Development Corporation. Now it is the largest miner in India. They have very, very tight control on costs. There are daily cost, reports circulated to up to mining manager and other level. so that if any cost goes high in a day, it has to be brought back within a day. They also have an international trading arm to sell ore internationally. Then shares are public traded. The last price was 183 rupees. I saw it on the moneycontrol.com, and that's where I have put it. They are working on a mix of permanent employee and contractual operators. What they have done is they don't put 100% permanent employee or 100% contractual. They try to put about 70% contractual and 30% permanent at a worker level. From a staff level, they have got 100% permanent employees, because the idea is that they want a certain output. And with the contractual operator also, there is a bonus element involved, which is with respect to the output which a person gives. And they have very strong, very, very strong management, not as strong rather. It is one of the best run PSUs. Another thing is mobile airways bandwidth. Now, if we look into the total history of mobile, only Airtel has survived for a long time. Vodafone could not survive, Spice, Orange, Aircel. There were so many. I don't even remember the names. There were so many. Because earlier the licenses was given on a circle basis, not all India, and so on. Now, only Airtel has survived. Jio has a very big money as a backup. So Jio has been able to do good. And then they gave 6 months of free mobile, which also got them a large amount of subscribers. Now, cost of bandwidth is very high. Cost of bandwidth means the license fee is very high. And if the bandwidth is not used, that is a waste of license fee. The license fee is given on the bandwidth, whether you use it 24/7 or you don't use it. That is why all the people, they try to say, use 5G, use internet, use this, because more the bandwidth they use, better is what they are able to get the revenue. Another very interesting thing about mobile is you have to pay for the history. As soon as your talk is over, it is history. You cannot ask for a refund or a claim or anything. बात गई खत्म हो गई. So you are paying for the history. You cannot exchange, you cannot refund, you cannot do anything. It is gone forever. Then very high capital cost to provide connectivity. Now, I am with Airtel only for one reason. They have the best connectivity in India, whole of India. They have their own problems, but no matter what, they have the best connectivity. And to make best connectivity means large number of towers and maintenance and so on. And poor connectivity, nobody will like to have. Another thing with this is technological obsolescence is quite high. Now 5G is there. I know for sure in Canada they have started testing 6G. So अभी 5G पूरा इंडिया में नहीं है. So 6G in Canada they have started testing. So when will the 6G come and how quickly it will happen? We don't know. 5G is also supposed to be linking our devices with the mobile. So, when I'm sitting in, let us say I'm sitting in Calcutta taking a flight, then I can switch on my AC in my room from Calcutta through my mobile, so that when I come, my room in Delhi is cool. So many devices have started coming like it. I was staying in a hotel in Ludhiana and they had no switches. They said, "Aapko ye Alexa se hi kaam hoga." So, it took a little time to learn, but it was very interesting. So if you look into this, how do you manage to put money onto it? Another thing very interesting, the billing software of a mobile company is the most difficult because every mobile number has a different billing, what you call, parameters. So that billing of Airtel has been made by IBM because all our big daddies like TCS and Infosys, they failed. So like in the capital cost, what they did was they did a very smart thing. They said for every tower, Ericsson, Sony, Nokia, they have to put up their equipment. Tower will be of Airtel, but they have to put the equipment or the hangars as they call it, and they will be paid on the number of minutes the call is going through that tower. So they said they will not pay anything, only on the revenue share basis. So that's when their capital cost reduced and their connectivity started becoming better. So that is a very smart way to do it. Now, if we have to value Airtel, now if we look into the total license fee, that itself makes the company negative, which of course they are telling to the government that you put it per minute talk time and so on, and let us see what happens. Any questions, any comments? I hope you are enjoying.
Yes, sir.
Yes, sir.
So very, very different way of looking into businesses. Then what we do is we have to use the DCF. There is no other way by which we can do it, income approach. Now in this, there is nothing like an intangible benefit. There is no brand. लोहा लोहा होता है, चाहे स्टील अथॉरिटी का हो या टाटा का हो या किसी का हो. It is sold on its iron content. When you go and buy gold, you buy a jewelry of what you call Titan, or of Kalyan Jewelers. You don't buy gold of Kalyan Jewelers. Gold is gold, and gold is taken on the commodity price. So like you go and buy silver, the silver is that, and then you pay a making charges of silver coin or whatever. So there is no branding. So we don't have any intangible on the mining. Mining is purely a commodity, and all commodity, all potatoes are same, whether it is sold by Roshan Patel or Ramu Patel. So it is the same. So we use the DCF method. Now, sale quantities are to be re-verified by market conditions, projections by Niti Aayog and other experts, and other likely material available and imports. Now, here there are a lot of reports which are available on payment basis in the market, by which they give the projections of next few years. And we on a DCF, we cannot go beyond the license agreement time, because then only, because there everything stops. We don't know whether it will be renewed or not. So that's one. So the terminal value is the license time, and then we get the projection of the pricing in that manner. So, so price is even more difficult to get a hang on, means which verification by the experts and market trends, new mine, and so on. Then other costs. There's a very large cost of machines. Now, this cost comes as a front-loaded cost. Before you start, the cost of the machines start getting there, and then they keep on getting added. A lot of these machines, not lot, virtually 100% of these machines are financed, and so they are treated as a rental. A typical life of these machines is from 10,000 to 50,000 hours of operation. They're not in kilometers or something. It is in hours of operation. So that is something, again, we have to see. And we have to take a plant and machinery valuer there to make sure that you get a residual life of the machine and hence put the right value. Uh, Another thing is, if the residual life is less than the total license time, in the cash flow, we'll have to add that money again as an expense. And hence the net profit will tend to come down. So all this to be done upfront. How will the cash flow affect? Timing to deploy the machines, how fast will they be working? And so That is another thing. Then downtime of the machine, spare planning and repair expertise. Normally, as I'm a plant and machinery valuer, so as a plant and machinery valuer, when we go to a factory in operation, we don't give too much of cognizance on the spare planning. Of course, we look into what is the approximate downtime, but spare planning, no. But in case of mining, that is a very major issue because spares are just not available. Then license fees, there's a fixed fee per annum, even if there is no production, and then per ton or a percentage fees and other taxes. So this fixed fee per annum, in many times that also is very high. If you go to Africa, the fixed fee per annum is very, very high, and the percentage is much lower. And the reason in Africa they do it, they say these Europeans and others, we don't trust them. You give me the something which I'm sure of. The remaining we'll see later. Then the safety costs. So this is considerable in mine as accidents can be quite fatal and bad. And there is a special Mine Safety Act to be considered as well. And another thing which we have not talked about now is scrap disposal cost. After extracting the metal, what do we do with the residual mud? That residual mud is a very, very major issue that cannot be disposed in public spaces. It may be toxic, maybe a full plant to make the disposal is required. That means you make the mining, you do the mining, bring that to a processing plant, take the metal away, and then make another plant to make the disposal material environmentally friendly, like a effluent treatment plant. So, and these plants are there. A very interesting case in this is if you look into the NTPC coal or steam turbines, there is something called a fly ash which comes out from there. Now that fly ash 15 years ago was one of the major environment hazard till the time government said that you can start using that in making cement. Today, virtually all the cement makers, they add a certain percentage of fly ash because that makes a cement bonding far better. And what fly ash which NTPC was paying to get disposed is now able to sell. So there the new technology was created or a new right type of things were done where we came out. Another thing is with the steel plants, the mud, the after the blast furnace, there is a slug which remains. These sludges are now being used in making roads. So a lot of these things, scrap disposal becomes a cost. And lastly, environment. And mining, no matter what, causes a lot of environment damage, and that has to be protected no matter what. And mine can also cause sinkholes. Sinkholes means suddenly there is a hole in the ground, earthquakes, and these are also to be taken care of. I'm sure we all have heard of earthquakes because of mine, big mine closing down, or large water getting accumulated in a mine. So, then the water goes, seeps inside, it makes the soil softer, and earthquakes and things start happening. And in the summary, this is the last slide. The mine linked to a downstream facility is a better value. So if you take the metal out of mine, produce something, value add, and then sell, that has a better value than just doing the mining. Just doing the mining is absolutely labor job and nothing more. And mining requires considerable amount of cash. There is no doubt. And there is a large revenue and profit variation, and this is linked to international market price. And recycling of metal also poses a threat to price and volume. Now, just look at it. Recycling of metal. It is extremely environment friendly as compared to new mining, but it also poses a threat to price and volumes of the whole thing. Just a small comment more. Saudi Arabia is investing, I think, $3 billion to make solar plants from where they want to make green hydrogen, because they have realized oil may not remain their main source of income for a long period of time. So, sir, that is all. Any questions, answers? We have about 35 to 40 minutes. We can discuss anything more, not necessarily of mines, but even other as a profession. We all are in the same valuers, sir. This whole PPT, Divyajyoti will send to everybody, so that you need not worry.
I had a question that, like, being an SFA valuer, I'm used to getting enough market information and other information regarding an industry and all. But in this case, what are your sources of information for valuation?
Madam, one of the, you see, please don't mind making my comment, but I have dealt with SFA valuers and I have found SFA valuers to a very extreme cases. There are fantastic SFA valuers and there are SFA valuer. In one case, a company valuation, they said they want ITR of the promoter, their spouses, their children, all the KMPs for last 5 years, and the projection of their income for last 5 years. And when we said, why do you want income tax return of the promoter and their spouses? How are their spouses concerned? No, 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 we want to do this and that. Now, and there are, of course, SFA valuers who says, you leave it, we will do everything. Now, no matter what it is, a lot of research work is required. Making a DCF, every one of us have got the Excel sheet ready. We can plug in and find out the things. But unless we do a deep research into whatever it is, we will not come to know whether the value we are signing upon is a fair value. See, even though the value is an opinion, but an opinion has to be based on something we are convinced about. Like this Dubai case, I'm also party to it. So it's a company valuation, so there's an SFA involved. But once we told to him that your machines are over 12 years old, whereas the legal requirement is 10 years, he was shocked. He was not expecting that we'll be able to find out and do the things. So we all have to do a lot of research. I'll give you a very interesting case which happened to me about, I think, 3 to 4 years ago. There was 3 satellite equipment, something like a small printer, 3 of them. Total weight of the 3 equipment would be about 40 to 50 kgs. So I took the name, I took the serial number and everything. And after that, I gave this was an NCLT case. I gave the value at 35 to 40,000 rupees. Then the second valuer, also a P&M valuer, gave the report of 35 lakh rupees. So 35,000 and 35 lakh have absolutely no cognizance. So when the IP called me, I said, let's have a meeting and let's see. Either I am making a major mistake or he is making a major mistake. We all have to come to a common platform. And he said, fair enough. So we met. And then he said, a similar equipment like this is on sale on this particular website. And he has taken the price from there. I said, yes, I have also seen that. The reason I have not taken the price because I called up it's a US company. I called up the company. They agreed to talk to me verbally, provided I gave them the serial number of that equipment. So I gave the serial number of the equipment, and they said this equipment was stolen in Singapore. Number one. Number two, this equipment, we will not stand any warranty nor supply spare or anything. Okay. And number three, this equipment, it is now shut down for 6 months. And after 6 months, nobody will ascertain well equipment will work if you switch on or not. So as far as we are concerned, this equipment is scrap. So what I said that after that, I just took what will be the approximate gold, silver, if somebody takes and melts it down, and I've given the price. So now you look into the same equipment by two plant and machinery valuers. The whole approach was different in that case. Of course, after 1 week, the next person also said, no, I agree with 40,000. So the matter got closed. Interestingly, the IP was able to sell it only at 25,000, not even at 40,000. So, unless and until we do a lot of research, it becomes very difficult. We also did a case where SEBI grilled us. It was a purchase price allocation where one listed company was selling a major factory of about 300 crores to another listed company, and we were the valuers for the purchase price allocation. The interesting thing was their main equipment, the company had gone bankrupt. This was a plant of 1960s. The main company had got bankrupt in 1980s. So how to take, and the plant was still running with that equipment. So how do you do that? So there again, you have to think through, you have to discuss with your colleagues, come to a conclusion, do a lot of research, and that's when you are able to do justify it, at least justify it to yourself. So my only request is that whenever somebody, at least to me, when somebody says, I'll tell you something interesting happened yesterday. There is a IP. He said we have to see a software. So we went to his office. I said, show me the software. He says, I have this pen drive. You see this. So I said, okay. In pen drive, I said, there's no software. No. There is this file. I say, there are files. I'm not saying there are no files. No. Then you give me a value of 0. I said, sorry, I cannot give you a value of 0. If I give a value of 0, it means the software is existing. The only report I'll make is the IP did not show me the asset. And he's very upset. He's saying, Monday I'm going to talk to the company and their owner will show you the asset and all. He said, fine, you show me the asset. If you don't show me the asset, I will only write you have not shown the asset. How can I value 0 for an asset I have not even seen? I don't know. What do the whole group of valuers feel about it? Though that IP became very upset with me, but that's his problem. So if I can't see the asset, how can he can give a value? I'll give a report, I can't see the asset. Am I right, sir?
Yes, sir.
So this is these things are quite normal, quite common.
In
So I
IBC cases, lot of such things happen, sir, where the IP is not giving the proper report or data to the valuers.
no. See, I have a very simple thing. The first in the report, the first page is after conflict of interest and other thing. I write what is the information I got from IP. That is the first thing I write. In another case, it was an auto component. The IP, me and the second valuer, we all three went to the plant first time to see what is the material lying there. Now, there were no machines, only some work in progress. Now, in work in progress, one item was listed at 12,000. When we did a rough counting, it was 400. So we told the IP, who's also a good friend, nothing wrong. Of course, IPs are also human like us. So when we said, see, this is only 400, your list is saying 12,000. He said, I got this list from GST. The owners have signed and given this list to GST. So now you go and find. I said, no, as a valuer, I will not, my job is not to search for material. My job is to inspect, to see the material availability, and to see what is the quality and what is a realizable value. My job is not to go and hunt for the material. That's your job. Another thing which I have faced with the IP is that they say now you go and do the inventory of all the things which are lying, which also I refuse. I said, yes, I can do inventory, but for inventory, you have to pay me extra.
That is right, sir.
So what happens? IP will say, no, I will not pay you. You agree. I say, I agree. You have given me the work order for valuation. Where is it written that you have to do the inventory? So eventually, in these cases, what the IP does, they say, okay, I'll give you the manpower, you guide him to take the inventory. I say, fine, I'll do that. You see, we are there to make sure things move in the country. We are not there to create problems. So, but if it is, let us say, if it is 10 items I can do in 2, 3 hours, I do it also. But suppose in one case it was something like 3,000 items in a store. Now, I can't count 3,000 items in a store. But okay, those
Sir,
are part of parcel.
when we are speaking about the mines, a change in recoverable reserves and the estimated recoverable reserves that can pose a major threat for valuation. That we were discussing about the probable reserves and proven reserves. The proven reserves, that is the in-place reserve, uh, that also can change over a period of time. We actually, I'm from that background, and we have a experience of that. The in-place reserve has changed in actual practice over a period of time. And the entire estimation has changed, and the whatever investment has gone into for the production of that much material, that couldn't be utilized fully. This happened in the Hira field in Mumbai High, where the production was supposed to be of a particular level because that much recoverable reserve was expected. But then there came some permeability streaks that production, that much reserve was not there in actual practice. So the investment made for the production, only half that quantity can be recovered. So when we do valuation, the recoverable reserve, at how to estimate that, that's a challenge.
Yeah. This is the biggest challenge. You are 100% correct, and with the point very well brought out that at the time of auction or the tender, what the government has said and what actually comes out on the ground may not be same, and there might be wide variations.
So there is a similar problem in the case of electricity also. When you're laying some portion of the grid, let us say from one state to another, normally what the government will tell you is from distance from point A to point B where you are supposed to put up your lines. But then when you actually quote for it, get the tender, and then you go and realize that point A to point B is not so many kilometers, it is that plus let us say 15 or 20%. And so the entire valuation of your project goes for a toss.
This you are talking before quoting for the project or for valuation purpose?
No, for project, if you're doing project valuation for bidding, say let us assume that you're assuming a business value of so much. So you feel it is profitable and you bid for it. Once you get the project and actual work and actual survey begins, then you realize that point A to point B, there is going to be some zigzagging, and so your cost is going to go up.
Okay, can I give you some experience and some what my friends are doing today? See,
yes.
what today what you say is absolutely correct, and there is variations. So earlier there used to be a certain percentage of zigzagging which was taken and added to the project cost. But today, what people are also doing is they take permission from the government to use drones, and the path which the government is saying, they take detailed pictures from the drones of that whole area, and then it cuts into a far better estimate. Apart from zigzag, in the lines, there are also ups and downs. Achha, suppose the electricity line goes up or slightly higher from the normal surface, then the wind load on the wire goes very high. So the type of tower required becomes much more heavier. So there are not only cost of the kilometers, it is also the type of towers also changes. So what you say is absolutely correct. And but today there are companies which are using drones to do a slightly better job on this.
Thank you, sir. Because
And
I run into these kind of problems because I don't know the right questions to ask the estimators, like, so
so
that's
now
why.
you can do another thing is in Australia, drones, the movies taken by drones are acceptable as a valuer evidence. And drones you can also use for gas pipelines cross country and so on. So drones is a very nice technology today. See, Google Maps, they have a provision to take out a lot of these things, but in India, it is not allowed to use their services. So drones are being used.
Hello,
Yes, please.
I have one question on valuation of. Hello,
हाँ जी, हाँ जी.
I'm hearable. No? I'm audible to you.
हाँ,
Sir,
बिल्कुल
in
सर.
one of the case, the corporate debtor is engaged in mining activity. The rights are given by the state government of Madhya Pradesh. The CD is not operating from last 2 years. There are some stock of manganese oxide. Basically, they are manufacturing manganese oxide powder, which is generally used in pharmaceutical companies.
Correct.
Yeah, here the problem is stock is lying there from last 2 years, and I have obtained two valuation reports. Both of the valuers given the nil value for that. The contention of the valuer is because the stock is lying from last 2 years. First of all, they have treated it as a scrap. And second, their contention was because you cannot sell as a IP, you cannot sell this stock in the open market because it is a regulated activity. You have to approach concerned government before selling or auctioning this material, whatever the material, whether it is in raw form or it is in finished goods. So my question is whether this we can assign the nil value for that,
Okay,
because there
I'll
are
give
certain
you.
conditions on selling
I
conditions.
will. I
Yeah.
will give you very strong opinion. Number one, if a good is physically available, the value cannot be nil.
Okay.
There has to be a value. There may be a 10 rupee value, but there has to be a. Number one. Number two, manganese oxide, if it is lying there, is it lying in open? Is it lying in gunny bags? So the right thing to do by the valuer would have been that take out some samples and do the testing. How much of manganese oxide is still available or not available? Let us say in one gunny bag, it is 50 kgs, 20% has spoiled, but 30% is still remaining, or sorry, 80% is still as manganese oxide. Number three, taking permission from the government and whatever is not the job of the valuer. And valuer cannot say because government permission has to be taken, the value is nil. No.
So
As
third
a
question is from the perspective of insolvency professional.
you see, from an insolvency professional, if he says I cannot sell it, that is insolvency professional's problem.
Okay.
That is not the problem of valuer. See, in this case, the plant and machinery and land and building valuer, they are only valuing an asset. They are not valuing a liability. A liability is valued by the SNF value. So if I see something physically available, so there has to be a value to it.
It cannot be nil.
It cannot be nil.
Right,
See,
sir.
if you see something physically lying, how can it be nil? Number one. Number two, as a valuer, like I was telling you just a few moments earlier, that I went to see a software. Now, the software he has not shown. So my report will be, I did not see the software. How can I put a nil value? Nil value means I have seen it and there is nothing.
Right, sir. Thank you.
So, but manganese oxide, it is slightly hygroscopic, but it does not lose its total content even after 5 years. So, in case the IP wants to sell it, he can call several companies, including beauty industry, cosmetics, and they can come evaluate. And what they will do is they will give a quotation and they will take all the government permission on behalf of IP and take it away.
So one question I have.
Yes, sir.
You had told that the mining rights are non-transferable.
Yes. Mostly they are not transferred.
Yeah, okay. Now, is it product specific?
It is see, most of the mines today are a state subject. So there are the same mines in Madhya Pradesh, Satna, for cement, and the same mines in Udaipur in Rajasthan for cement may have slightly different terms.
No, what my question is, suppose you are taking a mine for lease for limestone or say coal, and it's just a weird question. And then while mining, you come across some other product which is more costlier than coal or something. It doesn't happen. Then
No,
what
it
happens to the
happens.
license?
Sir,
It
it
happens.
happens. Oh,
Okay.
yes, in metal it happens.
Okay. So what happens to the license? License is still valid or it was undergone?
No. License is still valid. What you are supposed to do is go and tell the regulating authority that we have found this extra.
Okay.
But you see, the most interesting thing in this is that you may find diamond in a coal mine because coal and diamond is the same.
Same. True.
And the actual case, Hindustan Zinc, they are finding silver in the zinc from zinc.
Okay. So they have to pay additional for silver mining then.
I don't know what was the case which went on because Hindustan Zinc has made a factory in Rudrapur near Nainital in Uttarakhand. So what they do, they process the zinc in Udaipur. From Udaipur, they load it on containers, bring it to Rudrapur where they make silver. Final refining of silver.
This again becomes a matter of case-to-case basis.
So that is the fun of valuation.
Okay, thank you.
So I don't know. I find these complexities is where it keeps our brain alive. So of course we don't earn much in valuation, or at least I don't earn much. Another small thing, let me put it across here as a point of discussion. Now, let us say there is a software in the company, and this software is, let's say, let me give two examples. One is it is a software to do simulation of a design, mechanical, and the second software is to simulate the total piping of a high-rise building. Now, both these two softwares, they are running software, they are being used. How will we take the value of these softwares? Okay, the thing which I use in these cases is, first thing I check whether the software is of the latest version or not. If it is of the latest version, then the second I check whether the AMC has been paid for that or not. If the AMC has been paid, it is the latest version, then and number three, whether it is transferable or not. If it is also transferable, then the cost is new software. In case it is non-transferable, then I immediately reduce it by 50%. And if it is an old version, then I reduce it by another 25%. Now, this values of 50% and 25%, I say it's a valuer judgment. There are no written rules for this. But these softwares, I only do valuation, which are engineering software. So if somebody tells me, please value my tally, then I say, sorry, that tally is, I don't understand tally.
Yeah, but there would be very rare cases where software would be valued standalone like this. Only
Oh,
then
yes,
the
oh,
question would come.
there are, I'm telling you, I was telling you this 3 days old case now. It is a, this software is the only asset of that company.
True, but they are using it for some business, right? So
No,
when
this company went bankrupt 3 years ago. So when it went bankrupt, the IP at that time, they sold off all the physical asset and they gave a report of 20 lakh rupees for this software. So now the liquidator is asking me that what is the value, and I say, yeah, show me the software now first. When was it made? What is the language used? Is it, is it what you call platform free? Can I use it in Android and Windows and Ubuntu? And when I was talking like this, the IP said, yeah, I'm a chartered accountant. I don't know what you're talking about. So yeah, that's why I'm a valuer for this plant and machinery. So there are all type of cases which come.
Software is an intangible asset, right?
Software is basically an intangible. Yes, you are right. And but softwares, no, I have no issue. If as a SNF valuer you can value the software, I am perfectly fine. But software which are very specific for engineering purposes, my view is for an SNF to value that software may not be possible. That's all. But I'm not saying that no. I have an argument that only plant and machinery should do or SNF will not do or something. Because there are always gray areas.
so currently, as per our valuer regulations, all IP related assets or intangibles would be valued by the SFA valuer. But wherever our expertise is low, we do take the opinion of experts. And I think their P&M valuers would be useful.
Anyway, let this IP come to me, because at this point of time, his problem is that he is not able to show the software. And his worry is that the report saying that there is no software available means that the liquidator did not take the asset from the IP. So it's a more difficult situation. Anyway, sir, anything else or shall we close? So I hope everybody enjoyed today's session. There was some learning, some thought which has gone in, maybe useful for us in the future.
Absolutely, sir.
Yes, sir.
Okay, what I'll also do is, which I should have done, I'll give you my mobile number. I am SK Agarwal. So these are the three details. You can take a picture from the mobile. And I will definitely give a reply, but my request is not to give me a call. Just send a WhatsApp and then we can fix a time to talk.
Sir, I have a question.
Yes, please.
Suppose a valuation comes for a mine. who should be taking it? We have three asset class. Land
In
and
my
building.
opinion, you
Yeah.
are absolutely correct. In my opinion, because the income approach is there, the right people to take this up is the SNF valuer, and they should take help from the other two valuer streams. That's what my opinion is. I have not done any mining valuations independently as a plant and machinery. I have done valuations as a team of all the three, and we have given a report with all the three. But because this is an income approach, and as a plant and machinery, I would normally be hesitant to do, because with the DCF, you also have to start considering liabilities and cash flows and so on, from which SNF is the right people.
Or can we say that one valuer cannot do it? It should be by a team of valuers.
No, normally what will happen is when a valuation will be asked for, so at that point of time, it is, even if we apply for it, we should very clearly say it will be a team of all the three valuer, which will be required to do the valuation. I would be very uncomfortable to do the valuation as a plant and machinery alone. So let us take the opinion of Mr. Sharma, who's a old senior banking professional. Hi, Sharma sir, what is your opinion?
Sir, I cannot give my opinion because it's a new subject. In banks, actually, what we were doing, valuation was not given that much importance. We used to have a valuation report and see what value the valuer has given. Of late, after I joined this organization, I realized that valuation has such importance and so much of things are to be seen.
No, sir, I have a different opinion. As a banker, you were trying to see the business case. Business case, every banker is seeing from, without a business case, you will never give. A banker will never give a loan. Correct, sir? And the DCF is a business case. The DCF is a business. The discounted cash flow, you have to make revenue, expenses, everything. So that is a business case. So so that is why my opinion is the leadership on mining should be more with the SNF.
Generally, bankers, what we require valuation is for land and building and plant and machinery. Other valuations like what we are, our registered valuers are doing, we bankers generally don't require. So we are concerned about land and building and plant and machinery.
Chale, sir, anything else or shall we close? I hope everybody enjoyed.
Yes, sir.
Sir, there was a person who wanted to share about the genetics case. So if he is still logged in.
Oh, yes. Chalo, my number is there. We can take it offline. We can discuss. I'm always interested to learn new complexities of valuations, even if it is not in my domain.
Sure, sir. Thank you.
Okay. Okay, sir. Thank you very much then. Thank you, everybody.
Yes,
Okay,
sir,
okay.
thank you.
Let me thank, sir. Let me also, we have come to the end of this CEP. Thank you, Agrawal, sir, for a very nice lecture.
Thank you, sir.
This was a new subject and you have covered it very nicely and extensively. And it was very interesting. The way you gave your lecture, it was very, very, very interesting. And everybody was quite attuned to you. And very nice, sir. Thank you, participant, for participating. This lecture was as per the direction, as Agrawal sir has already told, as per the direction of IBBI. IBBI wants that our valuers should be aware of all asset classes, all assets which generally are left. So this is one of our first lecture, rather second. Already we have done on agriculture. This is the second lecture on the various subjects which they have suggested. So thank you very much, participants. Please share your feedback and also suggest your suggest the subjects on which you require CPs to be conducted by us. Thank you very much.
Yes,
Thank you, Kajal.
Thank you,
Aviation.
sir. Thank you very much.
Thank you.
Thank you.
Thank you, sir.